Good afternoon, Mr.
Good
Chairman.
afternoon.
Hello, Mr. Chair.
How is everyone?
Good. Excited to
Well,
talk
sir.
about highly technical matters.
Highly technical. Do we have any council people? I see Councilman Marks.
I think we have three.
I see Councilman Crandall.
I'm here.
It's very exciting when Councilman Crandall shows up. Not that he doesn't show up, but
Well,
on time, amicable.
depends on the week, sir.
I understand. Should we get started, Mr. Secretary?
Well, you
Are we
certainly
giving
can.
everybody like 2-3 minutes?
You certainly can. I think you've got three right now.
I could ask Dr. Rogers to weigh in.
Does Dr. Rogers make us a quorum?
Dr. Rogers could be the quorum. We could have her sub for Councilman Ketch.
Good afternoon, everyone.
Good afternoon, Dr. Rogers. We're waiting on, looks like we're waiting on at least 3 of our colleagues. So we'll give them a minute. If they don't show up, we'll get moving.
I sent reminders to them, Mr. Chair.
Okay. I think they know they might be having technical difficulties or something.
Councilman Young is on.
All right, I see Councilman Young is with us, so we have a quorum. I guess we'll start, and Councilman Jones and Patoka, I'm sure, will be with us shortly. So,
Ready for us?
Miss Irwin, you ready?
Yes, we are. I would like to introduce Ms. Marie Zhang from my office, who has handled the retirement and Social Security contributions budget. Take it away, Marie.
All right, Marie, thank you.
Thanks. Yes, good afternoon, Chairman and members of the Council. Operating budget highlights for the Office of Budget and Finance's Retirement and Social Security Program begin on page 2 of the analysis package. As shown in the budget summary, the proposed budget for retirement and Social Security for fiscal year 2027 totals $253.7 million, an increase of $16 million or 6.7% over the fiscal year 2026 budget. The retirement portion of the budget totals $223.8 million and increases by $13.8 million or 6.6%. Primarily due to a $9 million increase in the general government portion of the county's contribution to the employees' retirement system for fiscal year 2027. This increase includes approximately $4 million to fund the county's actuarially determined contribution, as well as an additional $5 million contribution above the ADC intended to strengthen the system's financial condition. The retirement portion of the budget also includes an increase of $4.8 million to cover additional teacher pension costs that are shifting from the state to the county in fiscal year 2027. The Social Security portion of the budget totals $30 million and increases by $2.2 million or 7.9% due to an increase in FICA contributions associated with the proposed budget's higher salaries. The county is required to make its full actuarially determined contribution, which for fiscal year 2027 totals $223.6 million under county law. This budget only reflects contributions to the retirement system for general government employees. The proposed budgets for the component units, the Metropolitan District, and the Revenue Authority each include their respective contributions. Other noteworthy highlights on page 3 include the impact of the planned salary enhancements included in the proposed fiscal year 2027 budget on the employees' retirement system. These compensation changes are expected to increase the county's fiscal year 2028 actuarially determined contribution by $10.6 million. Exhibit 1 on page 4 shows that the increase in the actuarially determined contribution continues to have a significant impact on the general fund budget. The general fund contribution to the employees' retirement system, combined debt service payments on the county's pension obligation bond, totals approximately $243 million in fiscal year 2027, or 8.1% of the general fund budget. On page 5, the pie chart shows how the proposed funding will be allocated across expenditures, with the contribution to the employees' retirement system representing 82% of total expenditures. And then Exhibit 3 shows the budgeted increases and decreases. As mentioned, the contribution to the employees' retirement system represents the majority of the agency's budgetary increase in fiscal year 2027. On page 6, the analysis identifies areas of potential budget flexibility within the retirement and Social Security budget, including additional funding for the employees' retirement system above the actuarially determined contribution. These items are presented to highlight factors that may affect future budget flexibility. More detailed pension system information is available in Appendix B, and information related to the post-retirement increase fund is available in Appendix C. Finally, the package includes questions for the Office of Budget and Finance that we requested be addressed in writing prior to Friday's deliberations. And I would like to thank the Office of Budget and Finance staff for their assistance during this budget review process. And at this time, I would like to turn it over for discussion.
We can't hear you, Mr. Chair.
I muted myself, sorry. Thank you, Marie. Appreciate you presenting. Are there any questions from the members for Ms. Zhang? I can never see with the screen, but I don't think there are any questions. So, Councilman Crandall, did you have a question?
Yeah, I just, I'm looking at the budget flexibility statements on page 6. And I'm looking at the last sentence. Generally speaking, the lower the system's funded status drops, all else being equal, the less the future budget flexibility available to the county on all non-retirement related spending. Can I get sort of a layman's explanation of that last statement, Marie or Liz?
Liz, did you want to take that, or?
I can. Sure. As the funded status drops, you have to make up that gap between, so if we're at about 60%, you have to get to the 100% over your funding horizon. And so the more that gap is, the more you have to make up room basically over that period of time. So your annual contributions get bigger and bigger the bigger that gap is. That's sort of the simple explanation.
Yeah, so
obviously the more your contributions increase, then that's taking away from other priorities in the budget.
Sure. So, I mean, in essence, and I'm not suggesting that we do this, but if we were to cut $5 million out of the retirement system, we're basically kicking the can down the road. We're going to have to come up with that money at some point.
Correct.
So we kick the can down the road, and future priorities elsewhere in the budget may suffer if we would cut this. Is that?
That is accurate. And moreover, the Spending Affordability Committee actually allows for an exclusion from the guideline to encourage additional contributions to the retirement system, to say, in addition to what's the actuarially determined contribution, if the county wants to contribute additional on top of that's not going to count against spending affordability, because really what's that's doing is helping the fiscal sustainability of the county down the road. It's a good a good thing. It might cost more in the present, but it will be beneficial in the long term.
Okay, copy that. Thank you, Liz. Thank you, Marie. Thanks, Mr. Chair. I'm good.
Thanks, Councilman Crandall. Any other questions from the members? I think, so who's presenting from the administration?
I am, Mr. Chair. Kevin Reed here.
Oh, Kevin, there you are.
How you doing, sir? Good afternoon. Good afternoon, council members. Thank you for the opportunity to discuss what's very important to us, our retirement system. Most, if not all of us on this call. I'd like to introduce some folks I have with me, internal and external. I have Deputy Director Matt Carpenter is on the call. I have our Chief of Treasury Management and who oversees the investments in the retirement system, along with the board, as Mr. Mike Walther. Our external partners, we have Joanna Bewick from Wilshire, who is our new investment consultant for the Board of Trustees. And Tom Vicente and Jim Ritchie are our new actuaries from Bolton that are with us today as well to address any questions. We have some brief plan history. This pension system was established January 1 of 1945 by county ordinance, and the authority to establish and maintain the system is specified in Section 5-1-101 of the county code. And the system, we have two different trusts. The system was closed for members hired prior to July 1 of 2007, now known as Plan A members, and members hired on or after July 1 of 2007 are members of the Plan B trust. And at the time, a lot of different pensions of our size around that time made this move to, it was really a prudent move to ensure stability of pension systems as we move forward. Some basic facts. This is a classic defined benefit retirement system. It's a traditional pension. It's a 401A plan. Benefit eligibility and amounts are defined within the county code, and benefits are normally based on a member's length of service and compensation, and also depending on what group the employee is classified in. We have a contributory system where all members contribute a percentage of their salary into the system, and this is mandatory to join. And the percentage is based on the member's employee group. So again, the income that we have is employee plus employer income plus investment income. And I think we'll discuss with Wilshire that we did have a good year from an investment standpoint. In an FY25, we ended the year with a over 10% return. And exciting news that we also recently, with our last quarter close, that we fiscal year to date had received a 7.27% return, which beats our peer indexes of those above $1 billion, which their average is around 5.86%. And our 1 year return from March 31st was a little under 14% based against our peers of 12.18. So I think that's really good. It's a really good start, strong year of the first quarter has been very interesting, but we're excited about where we are. And I think that we'll see some turnaround in the system as we move forward. I want to note that the ERS is governed by an 11-member board, and that's set forth in the county charter. And it consists of 2 appointees by the county council, 1 appointee by the county executive, 5 ex officio members, of which I am one of them, and 2 trustees elected by the active membership, and 1 trustee elected by the retired membership. And I talked about our returns last summer, the board, and I know that we had briefed the council and went in front of council with these contracts, that the board took a really hard look about where we were and the health of the system. And we made some aggressive actions by moving to a new investment advisor with Wilshire and then moving our actuaries to Bolton. And again, as I'm happy to point out, I think we're starting to see, hopefully, although it's still early to really see those returns, we've seen a good start. I would like to address two. I will say, first of all, I want to thank the county auditors. I enjoy the work that was done in this package. I think the charts and the write-ups and the exhibits are great. I use these all the time when we have discussions with labor about what is realistic in our pension system. I do want to address the budget flexibility that Councilman Crandall mentioned. We were able to fund an additional $5 million because of one-time surpluses that we had, or money that we had available in FY26. And it almost seems a little bit contradictory to later in the package where it talks about talking about how we need to ensure that, and notes that labor and the cost of COLAs and salary increases does get very, very expensive. All things being equal, in order to fully fund this retirement system up to 100%, we would need $2.2 billion right now. So the 5 million, although is something we have done, and we did that on top of the 50 million that we added a few years ago, is a step in the right direction. And again, as Liz Irwin mentioned, that we are excluded from spending affordability to do so. So I wouldn't consider it budget flexibility. I'd consider it a budget necessity really at this point. And as Councilman Crandall, your question is really important, that this prevents us from further kicking the can down the road and hoping to see this funding status turn around, which I think you'll finally see on page 9. But I am happy to address some of the auditor's questions. We're talking about the general fund cost of the employees' retirement system in coming years, question 1, and talking about the actuary's most recent projections, and the ADC, which is the annual determined contribution, used to be called the ARC. It's expected to rise over the time. And the question is, what are the county's long-term plans for addressing the ADC requirements and improving the funding status of the system? So again, that the budget flexibility was mentioned on the previous page, asking us what we're doing about it. And I think that is the answer for part of the solution. And what we did in FY27 with this budget is we're going to try to do a little bit better than what we said we would do. And, from a long-term planning standpoint, the county, we conservatively estimate a 10% annual increase to the ADC to what we plan to fund over the long term, and consider this additional funding at one-time sources as available. So again, as we move forward with potential salary increases in the future, that will add to the cost. We do have a 20-year payoff, theoretically, of that. Again, all things being equal, and if investment objectives are met, that the ARC will be paid off, and then our retirement system contributions would drop precipitously. However, that assumes that there would no longer be any other salary increases for county employees, and that's not necessarily a reality. The ADC this year, because investments were strong, was a little under a 2% increase. So again, we were able to offer that $5 million as on top of that. The next question talks about the county's next experience study, which my office advised will be available in FY27. How will this affect future ADCs? We really don't know at this time. They could go up or down depending on the results of the study that we'll complete in FY or calendar year 28. And that's a really in-depth study that Bolton will do, and it depends on multiple factors of the demographics of who's in the system, the mobility rates in the system, and those who have come in and out of the system, along with their salaries. So that's something that we'll definitely monitor as we move forward. The other question, how does the county incorporate consideration of ERS funded status into labor negotiations and long-term compensation planning? And again, I think I touched on that earlier. I mean, we're looking at a roughly 10% increase to the ARC every year, assuming that, the county, we do have steps and longevities. We stress, the commitment that we have to increasing the funding status. There's a willingness to fund the system and get it back up to 100%. And I think the board has been very serious about that with the actions that we took this last summer. But we have to balance the needs of our workforce. We have to remain competitive in our job market, especially in our public safety areas, and we have to ensure that we have to deliver services to our constituents. We're not the only ones offering salary increases this year. Just from surveying some of our peer jurisdictions, Harford County is looking at a 3% COLA. Steps and longevity is as well as merit costs. Anne Arundel County is offering a 2.25% COLA plus 3% merit cost. Montgomery County is at a 3% cost of living adjustment, and Carroll County is at 4%. So, we really are in line with the salary increases that we're offering. And acting county auditors Irwin is correct in that these are very expensive, and it's very expensive at the cost to do business. And every time that we do offer salary enhancements, and it's noted in the analysis that we submit to the council, that these get very costly, but they are smoothed over time, and it's something that we plan for. if there's no other questions, I would like to address question 2. I believe that Joanna from Wilshire has a brief presentation that I'm going to welcome her to load up and share her screen. If that's okay, Mr. Chair.
Absolutely. Go ahead. Sorry.
Joanna, the floor is yours. If you there we go. Thank you.
I'm good.
Okay, perfect. Great. Thank you so much. And good afternoon, everyone. My name is Joanna Buick, and I'm a managing director at Wilshire. Our engagement with Baltimore County ERS formally began on July 1st, 2025. We're not quite a year into the engagement yet, but we're seeing progress, and we're really so grateful and pleased to have you as a new client of Wilshire. On page 2, you see that our agenda is to just briefly introduce Wilshire and then really spend the bulk of our time outlining progress that we've made thus far and next steps. Page 3 outlines the distinct characteristics of Wilshire. First, we bring longevity with over 50 years of experience, and our average client tenure is 15 years. We view you and all of our clients as long-term strategic partners. Second, 80% of our assets under advisement are public pensions. So this is an area of expertise for us. Baltimore County, as a public pension, you are right in our sweet spot. Third, as a firm founded by an aerospace engineer, we're quantitatively oriented and focused on risk management. Fourth, we have a differentiated approach to asset allocation with proprietary models, custom models for liquidity, economic factor exposure, and changing economic regimes so that you can see how your portfolio behaves in different economic environments. And finally, when we work with you to implement your asset allocation, we tailor it to your specific needs, and we leverage our global research platform to source best-in-class managers. Overall, we pledge to be laser focused on enhancing net returns by taking appropriate, well-managed risk. On page 4, we move from who we are to what we do and how we do it. On the left-hand side of the page, you see our guiding principles. First, Wilshire is a fiduciary in service of the board, and we are an extension of your staff. We are going to customize solutions to your unique needs. We're going to focus on strategic asset allocation. Asset allocation drives 90% of your return results, and it really is the key to long-term success. The 5th bullet point, risk is unavoidable, but it will be managed and appropriately compensated. And finally, we want to engage in really careful manager selection in order to beat the benchmark, but we want to do so at a reasonable price. We believe that costs matter. This is a budget meeting after all, and we agree with you that it's good to keep a keen eye on costs. On the right-hand side of this page, you see that all of our services can be categorized into 4 major functions. We always begin with asset allocation. In this step, we decide which asset classes to invest in and at what amounts. Step 2 is investment structure. Investment structure determines how we want to invest in each asset class. Do we want to be active or passive? Do we want to be large cap or small cap? Growth equities or value equities? And then in step 3, we select the managers who can execute on how we want to be invested. And finally, in step 4, we implement. Here we can help you with rebalancing, we provide reporting, fee analysis, and we offer research and ongoing education during the implementation phase. We have made progress in all of these areas, and performance is improving as shown on the next page. So in the upper left-hand corner, we see that over the 10-year time horizon, the returns of the total fund are in the dark blue bar. They are outpacing the discount rate represented by the red line of 6.375%. Now that's an important hurdle that you are clearing over the long term. However, also over the long term, the fund is underperforming the benchmark. The benchmark is represented by the light blue bars. And yet we see some outperformance versus the benchmark over the 1 year, the fiscal year to date, and the 1 quarter time horizons as of March 31st, 2026. So for example, in the table below, under the FYTD column, that's fiscal year to date column, we see that the total fund return was 7.27%. while the policy index or the benchmark return was 6.8%. So you are outperforming the benchmark here by 47 basis points, or about half of 1%. And then the bottom row shows that the median public pension plan with assets of 1 billion or more returned only 5.86%. So what is driving improvement? Well, in the next few pages, I'm going to share upgrades that the board and your staff have implemented in each of these 4 functional areas. So with regard to asset allocation, our goal is really to allocate the assets in a way that maximizes your return while minimizing your risk. So the red dot represents your previous target asset allocation. And in this graph, the vertical axis is the expected return of the portfolio, while the horizontal axis is the expected risk of the portfolio. The new target asset allocation that was approved by the board in December is mapped in the northwest of that red dot. So meaning that the new portfolio, by moving in the northwest direction, it actually decreases risk and it increases return. And we accomplish this by being less reliant on public equities and diversifying the portfolio into other areas like fixed income, real assets or inflation-oriented assets, and private assets. On the next page, we detail some of the changes with regard to steps 2 and 3. Those are investment structure and manager selection, respectively. So with regard to investment structure, we increased passive management. We corrected the small cap overweight. We balanced both style and regional exposures, and we conducted a very careful pacing analysis when it comes to private markets, determining how much we should be invested there and at what pace. With regard to manager selection, this is painful for everyone involved, but we did terminate some underperforming managers. We have pursued more liquid managers, and we have implemented alternative structures with lower fees in addition to approving new private asset commitments. With regard to the final step, effective implementation, we've looked to cut fees where we can. The new asset allocation and structure allowed us to use more passive management, which comes much more cheaply than active management. And so you couple that with other manager and vehicle upgrades, and we've materially decreased fees. These fees, lower fees, fall directly to your net return. So this is going to help boost your returns year in and year out. Another function that falls under the implementation step is to provide ongoing market insights and education so that you and your team can continue to make well-informed decisions. So this spring, we conducted an education session on private credit, highlighting both the risks and opportunities in that space and how it impacts your portfolio. In short, while the risks exist in private credit, and frankly, risk exists in any asset class, we manage those risks by conducting rigorous due diligence, being diversified, and by sizing our exposures so that no one manager or security or asset class dominates your performance or your overall risk picture. Finally, as we look forward, we offer ongoing performance reporting. We are using this obviously as a report card for how we're doing. We offer continuing education, careful manager selection and commitments, and we will continue to scour the portfolios for areas of improvement. We have already done a structure review in global equity. It has allowed for restructuring. It has allowed for lower fees, and we think a more optimal lineup of managers. We are now turning our attention to the real assets or inflation-oriented portion of your portfolio, diversified credit, and core bonds, where we will go through that same exercise of optimizing the managers and looking for upgrades wherever we can find them. Overall, benchmark relative performance has improved, but it has been less than a year. It will take some time to turn the full ship around over the long term. And in my experience, improvement is not a straight line up. It's usually 2 steps up and 1 step back, but we make progress nonetheless over time. And in our time together, performance is up, fees are down, and that is a good start. So with that, I'll stand for any questions if you have them.
Okay, thank you, Joanna. Any questions from the members? Anybody's? Can only see. Joanna, I had a question. There was a slide, I think it was the very beginning, or maybe the second slide, where you talked about our peer groups.
Yes,
Could you go over that again about
absolutely.
where we are versus our peer groups?
Sure, absolutely. So I spoke about that on page 5, and that's in the table down below. So in the upper portion, we're just showing you returns of the total fund versus the benchmark. But then at the bottom of the page in the table, we show you the actual numbers. And the very bottom row shows you all public plans greater than 1 billion. And that is the median for this group. So we are comparing you against other pension plans that also have 1 billion or more in assets and looking at their total returns for these various time horizons. And so I zeroed in on fiscal year to date. That's pretty much the full engagement period with us here at Wilshire. And so with your total fund, again, the column is titled FYTD. Your total fund is at 7.27% over that 9-month period. The policy index or your benchmark is at 680. So you're up almost 50 basis points or 0.5% on the benchmark. And then if we compare that to your peer group there, the peer group is only at 5.86% for that same time horizon. So it's a good number for that time period.
Good. So we're
Yeah.
above our peers.
You are.
I thought you said we were under our peers. So that's
Yeah, over the long term, you are under your
better to
peers.
be above than below.
Yes, it is better to be above. And over the short term, we have seen some progress there. So that's good news. Over the 1-year period, you're above your benchmark, 3-year period as well. So we're all the way out to 3 years being above peers.
Good. And what the number, the chart that has us in the red, what is that again?
Oh, in the upper right-hand corner?
Fund out
Yes.
under performance that.
Yes. So this is merely comparing the total fund return versus the benchmark. So what I'm doing is I'm taking those numbers on the left-hand side where you show total fund return and benchmark, and I'm showing you the difference between the two because the scale is such that you can't really see the difference between the two in the chart in the left-hand side. So on the right-hand side, we're showing you really zeroing in on the difference. And so what it shows is that over the 3, 5, and 10-year horizon, you are underneath, you are below the benchmark, but in the 1-year, fiscal year to date, and 1-quarter periods, you are above the benchmark, and you are above the benchmark at an accelerating pace. 13 basis points for 1 year, 47 basis points or 0.5% for fiscal year to date, and almost 1% for 1 quarter. So again, good progress. Obviously, past performance cannot guarantee future results, but it's always good to get a nice positive start.
Good. Well, thank you for that.
Sure.
Any other questions from the members?
Mr. Chairman, I had a question for
Yeah,
Director Reed.
Councilman Young, go ahead.
Thank you.
I'm glad that you spoke up because I can't see all the, I'm looking through the thing to find hands, but go ahead. Sorry.
No worries. Reed, I know we've had extensive conversations about this and appreciate you and your team's collaboration on the Spending Affordability Committee. I know you referenced it. I just wanted to get a statement related to our funding ratio. And we've talked about the counties and our work to implement plans to get to a higher percentage, just looking at the charts that were provided and looking since 2022, effectively we're lower, but effectively haven't moved at all in terms of increasing the ratio, the funding ratio of our pension system. So I just wanted to give you an opportunity to kind of talk about what the expectation is. There's also fluctuations, as we've heard from you and from our contractor. But I just want to get an opportunity to kind of talk about what the plans are moving forward, knowing that there's volatility in the market, but how we're of 60% funding
Sure.
for our pension system?
It's a great question, Councilman. And this is a good slide. I think it outlines the discount rate of 6.375%. And again, that is a very conservative discount rate. And so when we look at that, we look at, beating the rate, and you see these couple years where we have, but then you also look at the 5 years and we're down. The board has adopted a 5-year smoothing methodology so that, if we have a really good years, that they're smoothed out, and that's called the actuarial smoothing. And FY22, we were down, and so once I can drop off 22, depending on how this year goes, it's anyone's game this year. So far so good. You'll see this on page 9. It's a really good chart. You start to see where we went from 58.2 to 59.5% on the auditor's chart. Sorry, Joanna. That we've finally seen after many, many years, the system starting to turn around. And again, this isn't the county not fully contributing to the ARC, or it's in fact the opposite, that we're going above and beyond. It really comes down to the returns that we're getting. And as you see on this chart, again, I think, as Joanna pointed out, I think the board, we were unhappy with what we were getting before, and the methodology and the mix, and part of having a fresh look and a fresh reallocation of what we had in the system, because part of the philosophy was, well, we don't need to be so aggressive because you have such a low discount rate. Well, that really wasn't satisfactory to a lot of us. And I'm not saying we need to be super aggressive, and this is for the long term. But I could easily say the system's 80% funded if we had a 9% actuarial assumed rate. But that's then over time it's just going to fall dramatically. So we're conservative how we move. I think I'm curious to see how we stabilize over the next few years. And again, we'll make adjustments as necessary to ensure that the system keeps continuing.
Right, and appreciate that, and also clarify it's hard to base a question or even evaluation of how we're doing based on one data point. It's a number of factors that go into it. I do know, and too, we've had this discussion about the perception and also the pressure that it puts in reviewing our fiscal health when the funding ratio isn't growing while our actuarially accrued liabilities consistently increase. And being able to be flexible so we can change like the board has. Appreciate that. Just wanted to make sure that we keep talking about a plan, and I think anecdotally we reference a plan. And if that we're consistently talking about evaluating where we are in that process to increasing our ratio. So I appreciate the clarification and your work on this. So thank you.
Yeah. I'd like to give shout out to the Chairman Day at the Mike Day of our retirement board, and the whole board for coming together last year and last summer and last spring, and realizing that having the appetite to do something different and to move forward, and with your support as well, and you all being part of this and approving our contractors that we need to. It's a very big, expensive system, and I think we have some good people on it, and I appreciate Joanna's presentation.
Great. Thank you, Mr. Reed, and thank you, Mr. Chairman. Appreciate it.
Thank you, Councilman Young. Any others from the members? Any other questions? Okay, it looks like we have no questions, so we will move on. Back to you, Ms. Irwin. Thanks for all the presenters, Ms. Buick and Ms. Young, Mr. Reed.
All right, ready to go here. Next up, we have our capital budget and debt service program, and Ronit Rubin. Ms. Ronit Rubin from my office will be presenting.
Okay, Ronit, the floor is yours.
Thank you. Good afternoon, everyone. The budget highlights for the fiscal year 2027 CPI capital budget and program, general government debt service, and PAYGO contributions to capital begin on page 2. As shown in the budget summary at the top of page 2, the proposed fiscal year 2027 CPI capital budget totals $173.6 million. As shown at the bottom of the budget summary, the proposed fiscal year 2027 general government debt service and general fund PAYGO contributions to the capital budget together decreases by $38.7 million, or 14.4% from the fiscal year 2026 budget. Capital budget highlights begin at the bottom of page 2 and continue on page 3. Debt service highlights begin on page 4 and include a discussion of the county's compliance with the Spending Affordability Committee's debt service guidelines. The issuance of general obligation bonds in fiscal year 2026 is discussed at the bottom of page 4. Planned fiscal year 2027 general obligation bond issuance is discussed on page 5. Also at the bottom of page 5, the analysis notes that the unissued balance for prior authorized debt totals approximately $1.2 billion. Continuing on page 7, Exhibit 1 displays the history of the adopted CPI capital budget versus actual expenditures. On page 8, in Exhibits 2A and 2B, the bar charts show the proposed sources and uses of funds included in the fiscal year 2027 CPI capital budget. Page 9 includes Exhibits 3A and 3B, which show the proposed sources and uses of funds included in the fiscal year 2027 to fiscal year 2032 capital improvement program. Continuing on page 10, Exhibit 4 shows a history of general fund debt service. And Exhibit 5 shows CPI debt service expense history. That includes interest amounts previously covered off budget through bond premiums. On page 11, Exhibits 6A and 6B show a history of the county's debt service as a percentage of total general fund revenues and debt outstanding as a percentage of total assessed property value, and their compliance with the Spending Affordability Committee's current guidelines. Exhibit 7 on page 12 provides a history of total county and metropolitan district debt. On page 13, Exhibit 8 breaks out unissued authorized bonds and the November 2026 borrowing referendum by category. Starting on page 14, the analysis discusses factors that may affect short-term capital budget flexibility, including project timing, contingencies, prior authorizations, and the timing of cash inflows and disbursements. And attached to this report are 2 appendices. Appendix A provides estimated total project costs, expenditures to date, and a timeline for notable project earmarks within the fiscal year 2027 CPI capital budget as furnished by OBF. Appendix B identifies project earmarks that include new general fund PAYGO. Finally, turning back to page 14, we have prepared a list of questions for the Office of Budget and Finance that we are requesting be addressed in writing prior to tomorrow's deliberations. I would like to thank the Office of Budget and Finance for their assistance during the budget review process. And at this time, I will turn it over for discussion.
Okay, thank you, Ms. Rubin. Any questions from the members for Ms. Rubin?
I do, Mr. Chair.
Go ahead, Councilman Crandall.
Sure. Thank you, Ms. Rubin. Excuse me. On page 13, where these are the items that are going out to referendum in November, they're listed by category, and I think I know the answer to this, but I just want to verify it. Are these how so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we'll have 10 categories. So there'll be 10 different referendums.
Yeah, that's
Okay,
my understanding. Liz, can you confirm?
It's 9 because
Okay,
there's nothing in there for the last one on the list there.
Right.
So
Right.
you
Oh,
can
I
see
see that
the
now, yeah,
second
okay.
column over shows the borrowing referendum. The first column that you see that has numbers for all of them is the current amount of debt that's authorized that hasn't yet been issued. So they haven't sold bonds for those amounts that the voters have already authorized. Then that next column is the additional amount that's coming to
Right.
the voters, and that amount gets built into the budget for fiscal year 28 then. That's what you see then when you see the appropriated bond funding for next year's budget, the FY 28 budget. Those are the amounts, assuming that the
Okay.
voters approve those.
Thank you. So it's one of the reasons for my question is that, and I'm very appreciative of the administration's willingness to keep funding and keep the Essex Library project moving. And I think it's a great project, and if anyone's seen the plans, it's just outstanding. So I wanted to, I guess, want to make sure, or if there's something to prepare for coming up in November, that like a project like the Essex Library that has a pretty significant price tag of what, $40 million, Kevin, I think, those items aren't itemized. So a new library and the funding that we're going to seek bond funding for that for that project, that would go into general government buildings or one of the other items. These particular capital projects have been identified, and there's several in the 7th district, and I'm very happy about that. But these aren't something that, like, if there's a particular project that a council member like myself wants to see funded, that I don't have to go out and say, make sure you vote for referendum number 3 or whatever.
Yeah, Mr. Chairman,
So they're
Mr.
not
Chair,
really, do you understand my question? So they're
yeah,
not
I
really
do.
itemized inside of the categories. It's just
Yeah,
more of a general statement on the ballot.
No, I understand. Yeah, to your point, it would be a quite a lengthy ballot if we, had every project outlined. But what Budget and Finance does do, and we will share it with the council this summer, is once and if the borrowing ordinances are approved at the end of next week, what we do is we put together a borrowing brochure, and it's a couple pages, a really nice document for voters and taxpayers that they can see specifically then what is included in each class, and we'll have it on our website and try to figure out and make sure that you all have a copy so that folks can go into the voting booth and understand what's in each one of these categories and highlight some of these really important projects. So we'll definitely, once that's compiled, we'll make sure you get it.
I seem to recall seeing those in the past.
Mhm.
Yeah. So
Yeah.
okay, like I said, I was just searching for verification of what steps that we might need to take to sort of educate voters on how important this particular borrowing referendum is. So
Yeah,
okay.
we will ensure that you all have that brochure when we get it out after the vote next week.
And Ms. Rubin, I believe you have something to add.
Yeah, I just, thank you very much. I just wanted
Sorry,
to
Mr. Chair, I
know,
jumped on Mr. Chair's authority there, but
That's okay. You're coming back from
paying
yours.
attention anyway.
thank you. I just wanted to note that the budget message notes that the referendum will include more than $58 million in bond funding to build a replacement Essex Library with additional planning and design to begin in fiscal year 2027. Just wanted to note that.
Okay, great. Thank you. Councilman Young?
Thank you. Question for the auditors, either Mr. Irwin or Ms. Rubin, just since we're on this slide, concerns from you or what we can gather from having such a large unissued balance to that we keep carrying over, but I just wanted to get your opinion, or if you had one related to what we should be concerned about long-term, short-term for having such a large unissued balance.
I think I'm going to defer to Liz on this one.
I mean, I wouldn't describe it as a concern. I don't completely understand it. I realize that I understand how the budgeting works. I understand that there's a lag. But at the same time, I also know that there's PAYGO that flows. A lot of PAYGO has flowed from general fund to capital over the years, and then that's, you know, rightfully allowed us to not have to borrow as much. And then the question just becomes, but costs are rising too, and so there's all kinds of things going on, and it's a good conversation to have. I guess really that's the understanding more about that, and in terms of, you know, how we come up with exactly the amount that we need to put into the next borrowing referendum, understanding cash flows. We don't see a lot of that. We don't see a lot of that in our capital budget.
Right.
So it's just,
What?
I have questions about it, but I mean, it's not really my job to
Sure.
understand
No
all of that, I guess.
I appreciate it. I just wanted to bring it up. It seems that we are providing short-term flexibility, but there are long-term concerns, especially like you mentioned too, inflation, cost of construction in general. So I was just curious from it large, and it carries over from year to year. Wanted to get your opportunity. Thank you, Mr. Irwin.
Absolutely. Thank you, Councilman Young.
Mr. Chairman,
Yes, Councilman Marks.
thank you. I wanted to ask a question. I know we're running late, so I'm just going to throw this out here. The administration can answer it if they know the answer. I have raised a concern that we have these community activity grants that have funded improvements to community halls and places like that across the county. The Department of Planning has done a really nice job with these grants. But my understanding is the eligibility has now been limited to projects within the ERDL. A lot of these projects that are being done are outside of the ERDL, and I'm really a bit frustrated that in the future, so much of the county will not be able to have access to this funding. Can anyone address this?
Mr. Chair, it's Kevin. I don't know if Steve Lafferty is on the call or dialed in on. He could be elevated to a panelist.
I don't see him on. Do you think he's around?
Chris, do you see him?
I did raise this earlier. I'll just make the statement. It is not fair, I think, to a lot of these neighborhoods that aren't in the ERDL to be excluded from receiving these grants. I mean, these renovations to community halls, community signs and such really have a beneficial impact on communities. And now 2 or 3 cycles after doing these grants, we're cutting them off. So you have to be within the ERDL. And I understand this argument about priority funding areas and such, but I don't think it's equitable.
Mr. Chair, I did see Director Lafferty as an attendee, but he may be on the phone or, you know, have the meeting muted, but he is an attendee in the meeting.
Okay, I've made my point. I really think this needs to be reconsidered because this has been a really good program in a lot of neighborhoods. And all of a sudden, we had folks who were gearing up to apply, and now you can only do this within the ERDL. I don't think that's right.
Okay.
So that's all I have.
Thanks, Councilman Marks.
Oh, I do have one more question.
Okay.
Can I ask a specific question?
Go ahead.
And Mr. Chairman, you and I have talked about this. I'd like to know about the status of the Northeast Trail, which has been planned for like 20 years now, and it seems like it's just been slow to get built. I mean, we see other trail projects kind of moving forward, but not this. And Mr. Chairman, you and I, this is an important project in both our districts. Does anyone have an answer on that?
Do we have
We
anyone
might
on for
not
Rec
have
and
the right
Parks?
audience for that, Councilman
Okay.
Marks.
I will raise this offline then. So thank you.
Okay.
Mr. Lafferty is the one I could make him a panelist to respond.
Okay.
Okay, thank you.
Councilman, you had raised the point before. This is actually a separate grant program from the one that we had back in 2023.
Okay.
During that 23-24 process, yes, we issued 7 grants to 6 grantees who are outside the ERDL. With the passage of the master plan by the county council, the focus really did shift to retrofitting and rebuilding within the ERDL, which is why the program that we established back in 2025 then refocused the funding inside the ERDL. There are other capital grant funds that have been spent on land preservation, of course, and there are other capital grant funds in our department that may be available to people who have needs outside the ERDL, but those would be handled separately from the Community Improvement Grant Program.
How is that fair to communities like Kingsville and Glenarm that don't get the same access now to that program? And why was it not? It was working. It seems like the program was working.
The difference was the passage of the master plan where we acknowledged the need to refocus more time, attention, and resources to the existing communities inside the Beltway and inside the ERDL.
But the master plan doesn't completely ignore the rural areas.
No, it
I
doesn't.
just don't. I just don't agree with this decision. And I want to commend you. Your department has worked very well on this. I just don't agree with the decision. So, okay, that's all I have. Thank you.
Thank you.
And
All
Mr.
right.
Chair,
Yes.
I believe
Go ahead.
Ms. Buckler is on about Councilman Marsh, your other question about the trail,
Yes.
if Ms. Buckler is able to address it.
Sure.
Good afternoon. So there's 2 Northeast trails. There's a Northeast Trail South and a Northeast Trail North. North is from Rossville to Beaconsfield Road, and that is nearing 100% design at this point. We're working on the retaining wall on Perry Hall Boulevard. Northeast Trail South is the one with the BG&E right-of-way issues. Environmental delineation that goes with that. So that one goes from Rossville Boulevard to Kenwood Avenue. That one's at 65% design.
What is the projection for finally building this? Do we know?
I don't believe we have budget for construction for either project. So we need to get through design and then put them in for budget in next year's capital request.
Okay.
Double check that.
It just, Lauren, this is not directed at you, but it just seems like this project's been around forever. And other trails I see moving forward, and this one just gets left behind. So.
I will just, in general, trail projects take much longer than you would expect them to take. All of our trail projects have taken significantly longer than expected. They've all run into challenges, environmental challenges, because typically they're in environmental areas. So you end up with more environmental issues that we're working through permits on. We end up with them in floodplains because that is a good place for a trail, but then we end up working through the requirements that go along with that. So a lot of our trails have had challenges. Northeast Trail has not had community opposition, which has been positive, but a lot of our trails have also had that, which adds to the timeline for these trails. But I will get you confirmation on construction timelines and funding.
Okay, can we explore state grant funding for this?
Yes.
Okay, okay, thank you very much.
Ms. Buckler, while we're on that subject, since you're here, the Northeast Trail South piece you said would theoretically would go to Kenwood Avenue. Have we abandoned the thought that it would go between Kenwood and Hazelwood? I think it was originally they were talking about it going down to Hazelwood Skate Park, which is off of Hazelwood.
That's where we were running into BG&E issues, and we had gone out and met with them about being in there right away. I don't think we abandoned that, but I will double check and get back to you.
I mean, do you need, I guess, do you need our help with BGE? Maybe Councilman Marks and I, if we're, I mean, I agree with Councilman Marks. If, you know, when this is finally complete, it'll be a really nice amenity for people on the east side of town. especially if it, runs that far. That's a significant trail. So we want to do everything we can, I believe, right, Councilman Marks, to try to advance this.
Completely agree.
Yeah. So
Okay,
we can
thank
talk
you.
offline on that. It doesn't really, we're kind of off subject matter for what we're
Sure.
talking.
I will get back to both of you with details.
Okay. All right. Thank you so much. Good seeing you. All right. Any other questions about debt service? I think we're on to the next item then. Ms. Irwin?
Okay. So now we move into the capital budget for BCPS, the county's funding of it. And then we're going to go straight into the operating budget presentation for BCPS. So then we can just turn everything over to you to talk with the superintendent.
Okay, great.
So we'll start. Ms. Rubin is going to continue for us talking about the capital budget for education.
Is that allowed to have her present for two different items?
Well, she did the work on two of these, so we're gonna let her present twice.
Go ahead, Ms. Rubin.
Thank you. Good afternoon again, everyone. The budget highlights for BCPS capital begin on page 2. As shown in the budget summary, the proposed fiscal year 2027 CPI capital budget for BCPS totals $17.9 million. The 6-year capital improvement program totals $621.9 million. Capital budget and program highlights begin in the middle of page 2, highlighting funding for major maintenance, site improvements, kitchen equipment upgrades, roof rehabilitation, and fuel tank replacement. On page 3, we discuss the status of major school construction projects, the process for obtaining state aid for construction, and state aid highlights, including a $30 million allocation in fiscal year 2027 for the Delaney High Replacement School. On page 4, we discuss overcrowding and the fiscal constraints affecting the timing of additional school construction. On page 6, we discuss the status of current boundary studies and changes. Continuing on page 7, Exhibits 1A and 1B contain bar charts showing the proposed uses and sources of funds included in the fiscal year 2027 CPI capital budget for schools. On page 8, in Exhibits 2A and 2B, the bar charts show the proposed sources and uses of funds in the fiscal year 2027 to fiscal year 2032 capital improvement program for schools. Page 9 to 11 provide detailed information on year 2025 to 2026 enrollment and capacity for elementary schools. Pages 12 to 13 provide detailed information on school year 2026 to 2027 enrollment and capacity for middle schools. And pages 14 to 15 provide detailed information on school year 2026 to 2027 enrollment and capacity for high schools. Starting on page 16, the analysis notes that capital budget flexibility is limited in light of all the needs and constrained funding, but there is moderate flexibility in terms of current funding allocations to bulk projects, allowing for some discretion in prioritizing projects. Finally, we have prepared a short list of questions for BCPS and the Office of Budget and Finance, which we request be addressed through written responses prior to tomorrow's deliberations. I would like to thank the Budget and Finance and BCPS for their assistance during this budget review process. And at this time, I would like to turn things over to Carrie Vivian, who performed the operating budget analysis.
Thank you. Good afternoon. Operating budget highlights for BCPS began on page 3 of the analysis. The county's proposed FY 2027 budget for BCPS totals approximately $2.5 billion and reflects an increase of $94.8 million or 4% over the FY 2026 adopted budget. The county's general fund budget for BCPS totals $1.1 billion, an increase of $37.7 million or 3.4% largely due to the school system's personnel and personnel-related expenses, including negotiated compensation increases, which are partially offset by reductions in positions and other operating expenses. These budget changes are shown in the schedules on pages 6 and 9, which provide amounts in thousands of dollars. Excluding pay-go and debt service appropriations, the county's proposed general fund contribution increases by $29.2 million or 2.9% over the FY 2026 contribution. The proposed budget exceeds the state's maintenance of effort requirement by $44.5 million or 4.5%. To the extent that the council determines less funds than proposed are necessary for BCPS's purposes, budget reductions must not exceed the $44.5 million over MOE amount. The special fund or non-county portion of the proposed budget totals $1.3 billion, an increase of $57 million or 4.5%, primarily due to an increase in state funding and increased use of prior year fund balance. The proposed operating budget includes the use of $50.3 million of BCPS's fund balance, which BCPS projects will total between $90 and $100 million at the end of FY 2026. On page 7, Exhibit 1 displays BCPS's budget history. The pie charts on page 8 show how proposed funding is allocated across programs and expenditures and show the budget by funding source. Continuing on page 9, Exhibit 3 shows the budget increases and decreases by general categories. Exhibit 4A on page 9 shows a history of authorized versus filled positions, excluding the food and nutrition services and federal and restricted program positions. And Exhibit 4B on page 10 shows system-wide authorized and filled positions for FY 2026 and authorized positions for FY 2027. Page 11 notes the areas within the budget that may reflect budget flexibility. Exhibit 5 on page 12 reflects a history of BCPS's general fund balance, its FY 2026 year-end projection, and the amount by which the budget exceeds MOE for FY 2027. Finally, we have prepared a short list of questions which begin on page 13 and for which written responses are requested. We would like to thank BCPS, particularly the Office of Budget and Reporting and the county's Office of Budget and Finance for their assistance during the budget review process. At this time, we would like to turn it over for discussion back to the chair and the superintendent.
Thank you, Carrie. Appreciate your presentation. Any questions from the members at this point?
Yes, Mr. Chair.
Councilman Patoka.
Yes, Ms. Vivian, in your analysis, did we learn of the 367 positions that were cut? How many of those are vacant positions?
So BCPS did tell us that the central office positions are all filled and the instructional positions are a combination of filled and vacant positions.
But do we have a number of, can we subtract from the 367 positions that were eliminated? How many of those 367 are actually vacant across the board?
Mind if I chime in here, or do you want to take it, Carrie? Go ahead. You can, if you can take it.
That's fine. I was just going to add that BCPS indicated they didn't have full numbers yet on their vacancies. That's all for FY 27 because they expect by the end of June to have 400 additional vacancies based on the timing of when resignations and retirements are submitted.
I see. Okay, thank you.
Liz, did you want to add to that?
That covers it, I think. That's
okay. Thank you. So it's still an unknown number, I guess.
It's likely to be that enough vacancies will emerge. I mean, we were provided a current vacancy list, and so we have that information, and that's in the analysis as far as the numbers there, and then there will be additional positions coming open that they're anticipating by the end of the year.
Okay, that's the number I'm trying to figure out.
Together, it's going to be more than this amount reduced, but then it's a matter of which positions they are, and that's detail that we don't have. I mean, we can't have.
Past performance, for example, a mean over, the average for each year over the past 3 or 4 years, how many positions become vacant before the school year begins, so that we have some framework for what might happen.
So I believe that's where they indicated they typically have about 400 that they experience in June each year between
So
retirements and
this may be
resignations.
a
But I would
question
defer
for,
to BCPS for more
maybe a
specific
question
details
for
on that.
Superintendent Rogers, where if we are eliminating 367 positions and we typically have 400 vacant positions, then that would be no live bodies would lose their jobs. That's what I'm trying to figure out.
It will
How many
depend on
people are
which
going to lose their
positions they
jobs?
are though. So,
Pardon?
because
I would
depending
also
on the
add that
qualification.
according to the MOUs, there wouldn't be layoffs, so they expect that most of the positions will be absorbed through attrition.
Okay. All right. Thank you.
What I understand.
Okay, thank you, Councilman Patoka. Any other members before we move on to the superintendent? None? Okay. Dr. Rogers, the floor is yours.
Thank you. Good afternoon, everyone. We appreciate the opportunity to be here. With me today, I have Dr. Jess Grimm, Chief Operating Officer, as well as Mr. Whit Tantliff, Executive Director of Fiscal Services. We have a short presentation for you on the operating budget that is likely going to respond to the questions that Councilman Patoka was just asking. But before that, I wanted to give Dr. Grimm an opportunity to answer the 2 questions that were available in the capital budget packet, and then we'll jump right over into operating, if that is okay with you, Chair.
It's okay with me.
All right, Dr. Grimm.
Good afternoon, everyone. So I'm going to answer the second question first. That was, how will BCPS continue to implement pre-K expansion with the constraints of existing infrastructure and the county's private providers? We will continue to emphasize and support our private providers around the county. We also look at enrollment opportunities by school and whether they currently have full day or half day programs. And we look at space utilization within our buildings on a continual basis to see if we can make any adjustments. Over the last 2 fiscal years, in fact, we've been able to add a significant number of seats by making adjustments internally and using resources that we already have. For example, sometimes we have relocatables that we already are leasing or own and can move or adjust them based on need, or we may be able to adjust classroom space or instructional space within a facility in order to accommodate our youngest learners. In the FY27 budget, we do not have any specific dollars earmarked for expansion of pre-K programs. The first question was, please explain how current funding constraints, concurrent project demands, rising project costs, changing enrollment and capacity trends in the county's MyPass are affecting project prioritization and project timelines. We've shared with you over the last few years. We very much appreciate the support of the county council and of the county constituents in voting for referendums on new school construction. We also appreciate the IAC's contributions as well as funds like Built to Learn. However, without funds like Built to Learn, we're now facing a considerable shortfall in our capital dollars. And that's why you'll see the capital projects that we have asked for to be funded this year largely include systemics. They are boilers, chillers, roof replacements. We fund through grants, but also through the county. We have the 3rd oldest infrastructure of school buildings in the state. And as a part of that, it's important for us to ensure proper maintenance and safety at all of our sites. It's also important to note that we have at this time 3 high school projects in construction at the same time. We're very proud and excited to show you the completion of Lansdowne High School this coming fall. It will open in 2026, in the fall of 2026 for our students. But our 2 other projects that just began construction this school year, Delaney and Towson High are incredible projects, but they will be in the upper $200 million range for each project. And so it was noted earlier, I believe it was Councilman Young that stated, with these rising costs, how do we do it? And it's ensuring that, again, we prioritize together what we want to do to move the county forward. But you will notice that our requests this year really do focus on those systemics and some limited planning and design dollars to move future projects forward.
Mr. Chairman,
Yes, Councilman
do
Marks.
you want me to wait to the end, or can I ask a question now?
Go ahead and ask your question, Councilman Marks.
No, because it directly pertains to this. So Overley High School, which I believe is the most overcrowded high school after Towson, correct? That will be in a position once Lansdowne is finished to begin moving forward, some sort of expansion there, correct?
So Overley High School was approved by the board. Thank you for your question, Councilman Marks. Overley High School was approved by the board as the site for a replacement school in the Northeast. We will begin the planning phase of that particular project. But yes, it is still several years away from being realized, because we do not have any plans on the books or any design at this time. But it is it's either the next it's actually the Patapsco project is next in the queue, and then I believe Overley is after that.
But can we, and I think Councilman Ertel, I don't want to speak for him, but I think this is a mutual prioritization for both of us. Can we do anything at this point to advance that project, even if it's elementary steps toward getting that moving?
So, Councilman Marks, I'll answer part of that. We are looking at some short-term relief for Overley High School. We do have some plans that we will be announcing soon to address the current enrollment situation that you're referencing right now. Even if we got the project kickstarted right away, as you know, with the planning and design and construction, it would still be several years away. So again, we are using the resources within our means, but yes, we do accept any help and support to make that a priority project.
Thank you. Can I have 30 more seconds, Mike?
Yeah, go ahead.
I think I'm going to ask this. Gunpowder Elementary School. The connection at Gunpowder Elementary School that the county executive and I and the community want, but the school system will not approve. Are you familiar with that at all?
Yes, sir, I am.
Can we get some resolution on this?
Well, so Councilman Marks, we'd be happy to speak to you offline about this. We have a few safety concerns that we're concerned about, as well as ADA concerns. There are currently two pathways to the facility that are sidewalked to it. This third one does present some concerns to the school system.
I just don't understand why we're pushing, safe routes to school and connections, and we just can't get this done. But I've done my job. I've brought it up. Thank you.
Thank you.
Thank you, Councilman Marks.
Mr.
Yes.
Mr. Chairman.
Yeah, Councilman Young, go ahead.
Yeah. Thank you, Mr. Chairman. Mr. Grimm, just wanted to line because I just was curious from the Built to Learn Act allocation, the $357 million from 2023. I know it's multi-year, it's not just a single dump, but I'd be interested in having a conversation with you about allocations since 2023 and what's left from that initial number that was identified for future projects.
Thank you, Mr. Young. We'd be happy to do that. I believe the last of the funding from Built to Learn will be to finish the Scotts Branch project, which is currently under construction. But we would be happy to detail any of that out for you.
And I appreciate that clarification too. So knowing that it'd be just that now that we're going to be at the end of it, it'd be good to kind of see a picture of where that went to, and even highlighting some of the wins from that allocation from 2020. Thank you.
Yes, sir. It was a tremendous windfall for our constituents. Absolutely.
Right. Thank you, sir. Thank you, Mr. Chairman.
Mr. Chairman?
Yes, Councilman Crandall.
Sure. I just want to thank Dr. Rogers for our ongoing conversation regarding Sparrows Point High School, Middle School, and the plan. I know, Dr. Grimm, you're more than aware of what's going on, and you know, it's one where our constituency, students, teachers, faculty have been asked to exercise some patience. I think Overly probably feels the same way. But I'm happy that progress has been made on site selection. The community is aware of the plan on separating those schools, using the entire property, using some of the county-owned property, accessing that for expansion of the campus. You know, I just wish that we were getting more money from the state, and that we could, just like Councilman Marks and Councilman Hertel, I wish we could advance this faster. But if the dollars aren't there, the dollars aren't there. But I'm confident, because the work that has been put in terms of community engagement, and the work has been put into again being able to access the adjoining county property to complete the future campus. You know, I'm just like everyone else. I want it done now, but I understand that it's not necessarily possible. So I do want to make a comment, and I really don't want this to come out the same way, and maybe I'll pose it as a question. So we've seen an increase probably over the last 6-7 years of new students into Baltimore County schools. And I think District 7, I don't have the actual numbers on this, I think District 7, and why you're seeing Patapsco, Dundalk L, Sparrows Point High School, Middle School, you're seeing the enrollment numbers go up beyond maybe what the formula said years ago. And I think it's because the rate and the amount of students who are part of families that have immigrated to the United States. And I don't know if our formulas, and so I'll pose my question, do our formulas that have been used in the past to anticipate or project enrollment in our schools, do those formulas include metrics for the amount and the pace at which new Americans are coming into our communities? And these kids need to be educated. You know, like I said, I don't want this to come off in a sort of a in the wrong way. But it seems to me, and just being in the schools and around schools and seeing pick up and drop off, that there's a large Hispanic community in the 7th district. And I'm just wondering again, like, was there any way we could have anticipated again the pace and the amount of new students coming in, because we couldn't anticipate it just using birth rates. So there's my question.
So thank you very much for that, Councilman Crandall. We appreciate your ongoing support of the Sparrows Point project, and you're correct, that Carl Trust property of the counties is a critical component for us to be able to move forward with the plans there. And we're excited about that project as well. In terms of your question, there was some anticipation earlier on, and I say that in the past year's projection on growth in the Southeast area. You can see that by the foresight of the addition at Dundalk High School, for example. Dundalk High School, when it opened up, and I think it was 2010 or 2011, forgive me, I don't recall which year, Dundalk was designed in such a way that we could drop in an addition like we are doing now, those 750 seats at that particular school. So there was some planning and foresight ahead, as well as when you look at Colgate and Berkshire, for example, and the size of those two schools now as replacements versus what they were. Could we account for all of it? No, we could not. You'll also notice in our enrollment projections, we have changed our model a little bit this year. It's published as part of what the superintendent has shared in her proposed budget, and it does take into account some of the enrollment decline that we have seen over the past few years. We looked exactly at that, Councilman Crandall. We looked at our formulas and what data we were using to accurately project what's happening moving forward. So I do think you will see us account for our multilingual learners and some of our transient families more in the future and in those projections. I hope that answers your question.
Yes, I think it does. Thank you, Dr. Grimm.
Thank you, Councilman Crandall.
Mr. Chairman, can I have 15 seconds?
Yeah, go ahead, Mr. Councilman Marks.
I want to ask about Lock Raven High School, since we do not have a councilman representing Lock Raven High School on the call. Where is that in a renovation list, and also Perry Hall High School? And I know funds are not there. I just want to know where they are.
So at the present time, Councilman Marks, neither of those schools are set for any kind of an addition or a replacement. So I couldn't, in good faith, give you their it's such and such place on a list. What I can tell you is that we have been engaging in systemics at both of those sites. I know that I believe that Lock Raven got a roof replacement last year, and I believe we did some other mechanical change there. Perry Hall High is on the list again for systemics this coming year. I know that doesn't fully answer your question of where they are in terms of replacement or full renovation, but our focus has been on those other projects that we've talked about in the high schools with replacements or additions.
I agree. And as these large projects finish up, that's where we can then turn our attention to the existing older high school. So, okay, thank you very much.
Thank you.
Thank you, Councilman Marks. Any other questions before we move on? All right, Dr. Rogers, you want to?
Yes, thank you very much.
Absolutely.
So we have a slide deck for operating. If you could pull that up, please. I also want to thank Acting County Auditor Miss Irwin, along with members of her team, Miss Rubin, as well as Miss Vivian, for your hard work and your partnership with our team over in Budget and Finance. We know that there have been many exchanges, and we too are pleased with the ability to communicate in advance to make sure that you have as much information as possible to guide this process. Also want to acknowledge for the viewing public that the Baltimore County Public Schools is a large portion of the Baltimore County proposed budget, as we are one of the top 25 largest school systems in the United States of America. There are over 13,000 school systems, and we are in the top 25. And so we want to make sure that it has been our mission this year to make sure that there was clarity around what goes into our budget, what the process is, and what it is used for. And so in these slides, these are most of these slides we have shared with the public before. A few of them we have added to respond to some of the questions that have come forward. Also want to take an opportunity to thank the Spending Affordability Committee and your work that led to the flexibility that restored critical positions and Team BCPS. Thank you to Councilman Young for your leadership of that committee. That $14.8 million more has made or will make, if approved, a significant difference in the lives of our students in Team BCPS. And so if we could start the slides, I will jump right in. Thank you. Next slide, please. So as I shared just a few moments ago, we are a very large school system, and we have 108,000 students who are counting on us. because this is a significant part of the budget, we just want to remind everyone our why. In 2 years, the significant investments that have been made in Team BCPS students have garnered significant results. If you take a look at the slide, and I'm not going to review everything, any data point that we have on this slide is either comparing Baltimore County Public Schools to the 23 other school systems in the state of Maryland, or comparing us nationally. Just recently, I started to receive some messages from colleagues asking and pointing me to a New York Times article that came out yesterday. And you'll see that little graph on the bottom. And the highlight that you'll note is the article is about reading test scores across the United States of America for the last 10 years and the regression that has happened across the state. When we started this work almost 3 years ago, the charge was very clear that we needed to focus on teaching and learning and improving academics for our students. If you just follow that purple line, you will see 10 years worth of literacy data for Baltimore County Public Schools. And so you will see from 2015 until 2023, just that downward decline in literacy scores. What you see where that line is from 2023 to 2025. And out of the 4 school systems that they have highlighted, you will note that Baltimore County Public Schools, both of the years, has been on an incline for an improvement. Clearly, there's more work to be done, as it took several years to get to this point. But my point in showing this is to highlight and express gratitude for the investment that has been made in Team BCPS and show that it is truly yielding dividends in terms of our student outcomes. Next slide, please. Our students have changed significantly over the last 5 years. Most importantly, the percentage and number of students that are economically disadvantaged has increased drastically. Until last year, we were growing by multilingual learners, which Councilman Crandall spoke of, by 1,000 students per year for the last 10 years. That stopped last year, and this year we're seeing a downward trend as well. And our special education students, or students receiving special education services, they have remained stable, while the costs to make sure that we are meeting all of their needs, those have increased over the last 5 years. The question that we set out to answer for our community, all stakeholders, is how is BCPS funding spent? And this graphic depicts that. The dark green represents the 82 cents. 82 cents of every dollar in BCPS is spent on employee salaries and benefits. It likely would be more if we did not have the 3rd oldest infrastructure in the state of Maryland. Our school system does very good job in maintaining all of our buildings and making sure that they are ready to receive students. With your support as well as the support on the state level, we are continuing to make sure that our students are in facilities that help to move them forward as they engage in learning on a regular basis. Next slide, please. Over the last 3 years, we have faced some significant fiscal realities. We started with the ending of the ESSER funds. What you see depicted by the cliff are important components of the Baltimore County Public Schools budget that were funded with ESSER funds. And so when those funds went away, we had to move those over to the operating budget. At the same time, there has been change at the federal level as well as the state level. And so with all of those realities, we still have the goal and the core purpose of making sure that our students were turning around that downward trajectory, that we as the adults were turning that around for them and giving them what they needed to be successful in schools. Next slide, please. And so as we went through a third year of a tough budget, at the very beginning, we enlisted the support of some outside experts to make sure that they were reviewing everything. We also used ERS to look at all of our staffing to give us some feedback on our proposed budget and the next steps that we take. On this slide, you'll see our retired Executive Director of Fiscal Services, the Acting Chief Financial Officer, who has a lot of experience with BCPS, decades worth, as well as Dr. Basu, Chairman and CEO of Sage Policy Group, who looked at different options that were presented and what their suggestions were, or what their analysis was to us in terms of how we move forward for the FY27 proposed budget. Slide, please. The significant issue that we find ourselves in, along with the rest of the state of Maryland, is declining enrollment post-COVID. While enrollment is declining post-COVID, the costs for wages and benefits have increased. As everyone knows on this call, BCPS in good faith negotiated a 3-year compensation package based on the projections that were available at the time, strong projections for blueprint funding and state surplus at the time, as well as steady growth and movement in our federal funds. And so with that, we found ourselves in a position that while in FY27, there continue to be increases, those increases do not keep up with the rate of increased compensation. Slide, please. Our compensation costs in the FY27 budget are shown here. An additional $93 million is included in this proposed budget for compensation. What you'll see depicted both on the pie chart as well as the table is by unions as well as non-represented staff, the total cost for both the second half of the year 2 compensation package as well as the full year 3 total cost of compensation. It's important to note that the budget that was proposed to the Board of Education, that the Board of Education adopted and the county executive has proposed to county council for deliberations and final decision, was a budget of last resort. Over the last 2 fiscal years, BCPS has made more than $168 million worth of reductions. One of the things that I heard from the beginning from members of council was concerns about the size of central office supervisors in particular. So year 1, our first action was to eliminate those vacant funded positions. And that is when we made the first significant salary turnover adjustment, which you'll see in a moment, where we were budgeting for 2% salary turnover, and we were budgeting for positions that had remained vacant year after year. Those ghost positions, if you will call it that, those were all eliminated from the budget. We also right-sized some responsibility factors. We began with our central office reductions. After we analyzed the size of our central office compared to similarly situated central offices across the state of Maryland, and for the first year, we did zero-based budgeting. For FY26, we continued with some of those. We moved into offsetting some positions onto grant. We reduced our baseline spending overall and made additional significant central office reductions. We had a non-school-based position hiring freeze, and the year 3 FY27 budget continues with 36 additional central office positions reduced, increased use of the fund balance. That is directly in response to the urging of county council members last year during the funding process, urging the school system to take a strong look at our use of fund balance and look at opportunities to increase. Almost a 74% reduction of new spending requests. We evaluated every single contract and our staffing zero-based budgeting continued, as well as the hiring freeze. This slide speaks to our negotiated agreements. As you know, we have 5 unions that we work with, and what is most important here, this slide highlights the positions that we reduced at the supervisory level in response to feedback, as well as in alignment to ensuring that we were as efficient as possible with the size of our workforce. With that being said, 99% of our workforce is represented. Fewer than 100 staff members are non-represented. What that means is all of our negotiated agreements has language in there that I believe Ms. Vivian spoke to earlier that indicates that there are no layoffs and no furloughs. This has been a part of our negotiated agreements since 1996. This includes our operating and grant-funded positions. And so we have made sure, and in a moment when I talk about classroom positions, we have made sure that we adhere to the negotiated agreements. All of our positions are aligned with credentials and the experience that employees bring to Team BCPS. This slide just details the eliminated central office positions as there have been questions or some comments wondering if the positions that were eliminated, whether they were just positions that were vacant for a long period of time. As you can see depicted on the slide, that is not the case. Well over 80% of those central office supervisory positions that have been eliminated were filled with individuals in them, both in FY26 and FY27. We have received questions about our teacher vacancies. Want to share with you a slide that we have shared previously. This is our teacher vacancy numbers from the first day of school going back to the 22-23 school year, where we had hundreds of teacher position vacancies, where this school year we open schooled with 34.4 classroom teacher vacancies across our 174 school sites. If we take a deeper look at classroom positions, we want to share and make sure everyone understands, well, we have more members represented by the TABCO bargaining unit. When we're looking at classroom teacher positions, BCPS employs 8,091 teachers. Post over the last 3 years, we have been hiring 500 to 600 teachers annually. Last year, it was 575 teachers. When we look at the reductions, first you have enrollment shifts. In every single operating budget, there are always changes made for enrollment, and those are net neutral. In this budget for FY27, you'll see a reduction of 111.5. That is directly aligned to the enrollment decrease. So from FY25 to FY26, our enrollment decreased from 110,000 students to 108,000. And so you have 2,000 fewer students. So when the students are not there, we adjust our allocation in terms of the number of positions. And so there is no adverse impact to our students when we adjust for enrollment. If enrollment had grown, we would have adjusted upwards. When enrollment decreases, we adjust downwards. Staffing allocation formulas in order to meet the $93 million of compensation. We spoke to all stakeholders and asked them to prioritize. We knew that we were going to have to look at workforce, and because over the last few years we have focused primarily on central office workforce reductions, that we are going to have to look at our staffing ratios. Our staffing ratios speak to how many teachers we allocate per grade level per school. So this doesn't matter how many special education students, how many students living in poverty, how many students who are multilingual learners. This is baseline based on how many students attend a school. And so what you see First, what was proposed, the first box, no changes to pre-K and kindergarten. We were proposing changes from grade 1 through 12. Because of the restored positions that are proposed from the county executive, we now have for FY27 no changes proposed for pre-K through grade 5, and a reduction in terms of the change for grade 6 through 8 middle school. Their number would now be the same as staffing allocation for grades 3 through 5, meaning for every 24 students, you would allocate 1 teacher. And for high school, for every 25 students, you would allocate 1 teacher. What this meant originally at the beginning of the budget process was a 324.8 full-time equivalent position reductions for these new staffing ratios. With the position restored, 130.3 of them are in the classroom. You have elementary and middle school, and then you have 10 additional positions for assistant principals. That leaves 194.5 positions that are being reduced for staffing ratios. And so again, I would point you to the 500 to 600 teachers being hired annually. And so with the master negotiated agreement language about no furloughs and no layoffs, this means that while teachers might be moved to another school, they will all have a position as a teacher in alignment with their certification in Baltimore County Public Schools. The last thing that you'll find on this slide, as we received a question about how much would it cost to restore those positions and keep us at the previous ratio, you see that by grade level here on this slide. Next slide, please. Wanted to go a little more into secondary schools, as we have received some questions from council members regarding high school in particular, and perhaps community members might ask questions about class sizes. When we look at class sizes in secondary schools, there's a lot of flexibility there, as staffing allocations should be used to create a master schedule for students. So students sign up for the classes that they are interested in taking, and using those numbers, a master schedule is developed. School administration must consider the impact of running small classes, because as you run small classes, when you take a class of 7 or 10 students, it means that conversely, on the other side of the master schedule, you are creating a large class size. So the things that are putting strain on the master schedules in our secondary schools are the small classes, giving release periods, and a release period is a period that you assign a classroom teacher to that was not in their schedule to engage in a project, maybe to work on small groups with students, etc. All good reasons, but they have an impact on class sizes or external pressures. When school principals are receiving external pressures for the favorite class or the favorite topic, that even though there are only 6 students in a 2,000 student building, that they're receiving pressures to keep those classes in the master schedule. There is an impact on class sizes. What you see in the section status is our report from our master schedules as they all exist now in 2026. What's important for you to look at is the percent that are not met. In column number 3, you see the number of full-time teachers that are hired. This means that these teachers are hired to teach 6 out of 8 class periods. These aren't those other positions that come with release period, like a department chair, like a reading specialist, like a staff development teacher. These positions are supposed to teach 6 out of 8 periods. What you see in yellow are the number of periods that those teachers could be allocated to teaching, but they are not in the master schedule. And so the last column shows you the percent that is available where there is flex in the master schedule because there is assignment of those teachers to other responsibilities. But again, they are hired to teach 6 out of 8 periods. And so if you are teaching 4 out of 8 periods, those are 2 periods of approximately 50 students. If you are looking at average 25 to 56 students, that those periods are no longer available for students to access classes, and that inflates class sizes across the master schedule of a school. Next slide, please. We have also had some conversation around salary turnover, and this is a slide that we shared with our Board of Education and our community about salary turnover. At some point, salary turnover and fund balance were being moved forward as 2 different ideas. Salary turnover is not a new source of revenue. What you see in the line graph depicted for you, salary turnover, the actual numbers and projected for FY 26 in BCPS, the highest was FY 24, and that is when you had all of those budgeted positions that had been traditionally vacant for years that we eliminated immediately as part of the FY 25 budget. And so you see it start to go down. Salary turnover is the amount of money left over in the salary budget at the end of the year. It includes every single position in BCPS. The FY 25 and 26 amount, we went from budgeting for 2.2% of salary turnover in the budget to 3.6%, nearly double that amount. We've adjusted that for this year, and I believe the exact number is 3.56 that is in that budget. And Mr. Tantliff can speak to that as he is going to cover the last 2 slides. As stated here, salary turnover was extremely high in the past because we had a large number of vacant budgeted positions in BCPS. Since FY 25, we have eliminated more than 1,000 positions. A lower headcount means less savings in this area. There are some things that must be true. The vacancy rate must meet or exceed projections. The budgeting and accounting teams, they identify the annual rate based on system needs and historical trend data. We must retain enough money in the fund balance for a potential supplemental and a recurring stable source of revenue as for the budget. You'll see some details there over the last 5 years. As you know, no decisions can be made regarding our fund balance usage without the permission of the Board of Education and the County Council approval. The money reduced from salary turnover is money that is reduced ultimately from the fund balance, and the money will no longer be there at year end. And I believe that is my last slide, and I'll turn it over to Mr. Tantliff to go into detail around salary turnover a little more and fund balance.
Thanks, Dr. Rogers. So these last 2 slides were of interest to the council and got a lot of discussion when we were presenting the budget to the board. So first, in terms of vacancy, Dr. Rogers mentioned we have increased it significantly over the past several years. And from a practical matter, if we increase our salary turnover, it reduces our fund balance at the end of the year. In FY 27, we increased it by 32%. We're going to budget $50 million in the proposed FY 27 budget. And this is in line with what members of the council encouraged us to do last year. And that was really as far as we felt we could prudently increase it. There was a proposal by the board to increase vacancy turnover by $28 million. And I'll show you the impact of that on our next and final slide. But it would have been, from a practical standpoint, the same as increasing our fund balance usage by 107%. More turnover equals less fund balance. There's nothing more to it than that. And we really need fund balance to stabilize when revenue dips, costs spike. The situation with the state is, getting tighter. I think everyone knows there's a structural fund balance. So the blueprint state aid could be impacted in future years. In FY27, they didn't reduce the formula, but it certainly could be in future years. So having some fund balance available is critical to give us some flexibility in terms of budgeting, similarly to the way the county treats their fund balance. Next slide, please. There's a lot of numbers on this chart, but it really just boils down to a couple of different things. This was just showing historically on the left column our starting fund balance, and in the right column our year-end fund balance. And so we talked about on the right a sustainable plan, which is what you'll see in the budget that's been presented to you. And the budget on the left was what we felt was an unsustainable plan. And we were in discussions with certain board members that were asking us, as I mentioned, to increase our salary turnover by $28 million. And so, to boil it all down, you can see on the right, keeping everything static is a very, very simple model. But you can see if we had done that by FY 2028, or we would have been basically at break even in our aggregate fund balance, and by 2029 we would be showing a negative fund balance. Now we can't actually have a negative fund balance, so we would have to cut expenditures by that much to make sure we can't use fund balance. It doesn't exist. But it was just to let the formula flow through, so you could see in a simple sense that if we increased our salary turnover by 28 million, which means we're increasing our expenditures by 28 million, because that money would have been used likely for additional teaching positions and other needs. You can see how quickly we drain our fund balance. Our goal is to step down to an annual usage of 30 million, which you can see in the second column in the right-hand chart. So we're in FY27, you can say it's 50 million. Then we're planning for next year to go to 40, 35, 32, and so on. And you can see on the top of the chart, that is what we historically used leading into the pandemic. And the last, nugget I'll leave you with is you can see some big numbers in fund balance usage and our starting and ending balance. That was largely driven by the pandemic. In 2020, the end of FY20, we weren't in school the last quarter. FY21 was completely remote. FY22, travel was significantly impaired, as was spending. And so there was a lot of purchase orders that were hanging out there that never got spent, just due to the nature of our inability to do that. That's ended now, and we've also, of course, overlapped all the COVID grants, the ESSER grants, which were significantly relieving the general fund. And I think you all may remember we had to absorb a significant step when the ESSER grants all sunsetted into the general fund budget. So we believe we're kind of on a path to a steady run rate now, and an increased use of fund balance would quickly put the budget in a difficult situation. Thank you. That's the end of our slides.
All right.
Okay. Mr. Chair?
Yes, Councilman Jones.
Yes, I want to thank Dr. Graham, Witt, and Dr. Rogers for excellent presentation. Really appreciate it very, very much. And I realize that this may be, I'm holding out hope. That's why I say maybe Dr. Rogers' last budget presentation she can hear. We certainly hope she can somehow change her mind. But Dr. Rogers, you have been a true godsend to our school system. I think was evident in that chart where you turned the literacy around. And I often tell people everything is going up except for truancy. Truancy is coming down. So thank you so much for your
dedicated service to Baltimore County government as well as BCPS, and you will certainly be missed, but well done. Well done for sure. Thank you.
Thank you very much for your kindness. I really appreciate that. I thank everyone for your partnership over the years, and I would be remiss if I did not attribute the success of the students to the hard work of all of the people who have worked shoulder to shoulder with me. As I said, there's still a lot of work to be done, but your partnership and your investment in Team BCPS, I think, is what has made the difference in order for us to create the conditions for success. So thank you to all of you.
Sure.
Okay. I know there's other questions from members. Any?
Mr. Chair?
Yes, Councilman Patoka.
Okay. Thank you, Dr. Rogers and your team for a very comprehensive presentation. I have a question about enrollment. And so in terms of the entry point being at K and pre-K, likely, and then the exit point being at grade 12. So with enrollment, you know, the simple way to view it is that you have students enrolling and then matriculating to the system. So you have a fairly good idea of what enrollment will be from one grade to the next. K's become first graders and then the second graders. So let's say hypothetically you have, and I'm just making these numbers up, you have 5,000 students graduating, just a made up number, and then you have 500,000 students that are coming into the entry point at K or pre-K. Are we losing, because it sounds like we're 2,000 off, do we lose them at the entry point or the exit point, or are we losing them somewhere in between?
So thank you for that question. And I will tell you that we spent some time looking at that question about, and it's not as simple as beginning or in between. One of the things is pre-K, those numbers aren't used in the calculations that the state makes. They use kindergarten through 12th. What we found for us as we dug into our numbers in enrollment, it wasn't that we are losing hundreds or thousands of students to private schools and things of that nature. You know, we only have one charter school in Baltimore County. We're finding a mix of things. We're finding the low birth rate that has occurred over the last decade plus has had an impact. We found that just over the last, I think 10 to 20 years, and this is your data, so I thank you for the work that you did on this, that we have 20,000 fewer school-age students than we did living in Baltimore County. We also have out-migration happening in Baltimore County. And we've seen for the first time one group that we could count on steadily for the last 10 years in a row, that no matter what was happening, even post-COVID, our multilingual learners were growing at the rate of 1,000 students per year. You can count on that until last year. And so when we went, and I actually went with my executive directors, principals, PPWs to speak to high school students who weren't coming back, what they told us was the impact of immigration enforcement, whether a student was in a mixed status family where the oldest student now had to assume some responsibilities, or there were some questions in the family, that is really having an impact on our students and enrollment. Finding second graders talking about that when I'm going into elementary schools and what some of their concerns are. And so it's really a mixed bag that we're finding in Team BCPS, and it's not concentrated in one zone either. Not one grade level, not one zone. We found those are the top 4 to 5 reasons. And we had some homeschooling. You might have seen a recent article where we have been successful in getting more than 100 families from homeschooling to join our online virtual programs, which is a plus for Team BCPS, and our increase in pre-K numbers by more than 2,000 seats over the last 2 years. Also, we are hoping will help as they matriculate to kindergarten and can count in the data that the state is looking at.
Is there likely to be a post-COVID birth boom and yield of more students?
I I don't know. I
That
would not be the best one to respond to that. I don't know, Ms. Irwin, Dr. Grimm.
I can only answer for what we've seen, as Dr. Rogers said, in the data that Baltimore County has shared with birth rate, and that's not the trend we're seeing, and it actually predates COVID a little bit. It predates COVID 4 or 5 years that we've seen a declining birth rate, and many of the issues that Dr. Rogers pointed out are not just isolated to Baltimore County, but they are statewide.
Mm-hmm. Anecdotally, I just recall hearing a lot of, COVID babies, what they were called. And so I didn't know if they, if that was going to impact our school system. And the last question I have relates to pre-K. So I didn't realize that pre-K is all on us. Like, so if someone were to say like universal pre-K, then the state doesn't participate on that in the local level? It's all Baltimore County funds?
The state offers very little funding for pre-K. There are very narrow parameters in which they provide pre-K. The IAC, for example, doesn't. It's not in their funding formula currently for how they would support pre-K expansion, although they have worked with us through Blueprint in order to compensate for that. So they are working with us, but some of their regulations are also behind Blueprint as well. So we should see that coming online in the next year or two. But yes, you are correct that Baltimore County picks up the lion's share of pre-K expenses.
And is it formulaic or is it case by case?
So the IAC has a formula for everything when it comes to construction. I can't speak to the curriculum side. Dr. Rogers, you can correct me if I'm wrong. I don't believe that we're funded pre-K for pre-K students per pupil on a per pupil basis.
I think Mr. Tantliff can confirm that.
Sure. For the last couple years, Blueprint does fund full day students that are what we call tier 1 and tier 2 students. So high poverty, special ed, multilingual. Going into this though, we had relatively very few full day classes. So we got virtually no funding, but as we've converted and added more full day, when those children meet the criteria, the state does participate in the funding, but it's not part of the core state aid, so to speak. It's it's student by student, essentially.
Gotcha. Okay, thank you all very much. That's all I have, Mr. Chair.
Okay, thank you, Councilman Patoka. Any other questions from the members?
Yeah, Mr. Chairman.
Councilman Young.
Thanks, sir. Dr. Rogers, I want to take an opportunity to thank you for your partnership over the last, well, specifically 3 years as I chair the Spending Affordability Committee. Appreciate the dialogue and also clear clarifications of what you all have had to deal with from the state level and local level. So thank you for your time. Sorry to see you leave and appreciate all the work that you and your team have done over the, well, as long as you've been there, but specifically in the last 3 years as well. I've got 2 questions, and actually they're more clarifying because I think you answered them, but I just wanted to make sure I understood. And we had talked about restoration of positions throughout the last 3 months. The final number is, as you stated, about 140 positions have been reinstated.
Correct.
Gotcha. And that's
130
also
classroom, 10 of them, 10 assistant principal.
Understood. And that also implies that there's, and you referenced the 8%, that's 8% increase related to salaries that are going across the board. And that was already established when the positions that were identified for being cut. These positions that are also being reinstated still also apply to that same 8% that's into the budget calculation, correct?
Correct. The 8% is in there for everyone. Yes.
Absolutely. Right. Then I guess, as you stated, and I think you made it very clear in the comprehensive report, language matters. And I think that there's been your efforts and your team's efforts of clarifying for the public that nobody's being fired, right? Everybody, positions that have been cut are positions that are being eliminated, but no person is being removed from the roles of Baltimore County Public Schools.
From all of the classroom positions, that is correct.
Right.
We have
Understood.
no furloughs and no layoffs. Where that becomes different, those 96 positions that I shared with you that are non-represented, in those cases, people are encouraged to apply for if we have any other openings or, positions that meet their qualifications.
Understood.
But with the exception of those 96 employees, everyone else belongs to a union.
Understood. Thanks for the clarification. And yeah, that was part of the end state of where we were and where we're at right now. Thank you for your flexibility and working with the county executive and her team. I think we all agree too. The communication between both BCPS and the executive's office was stellar, knowing we were going into a budget situation at the state that was going to be untenable. So thank you for your willingness to be flexible and for your partnership. Thanks a lot. Thank you, Mr. Chairman.
Thank you for your support, and I too echo true support and appreciation to the county executive and her entire team, Mr. Reed, Ms. Walker, Shane, and everybody else who has been a part of the process. We're truly appreciative. Thank you.
Thank you, Councilman Young.
Mr. Chairman.
Yes, Councilman Mark.
Thank you. Superintendent Rogers, I also want to thank you for your service. It is forgotten now, but you were instrumental with the school bus delays and getting those taken care of. You really were, and that you deserve a lot of credit for that. I also think back to the strides we've made in reducing overcrowding, particularly in the Northeast, where most of our schools are below their state rated capacity, and you were a key part of that. And I again echo what my colleagues have said about the work with the county executive, and as a member of the Spending Affordability Committee, providing that additional flexibility to all. I've already talked about the Gunpowder Elementary School issue. The last thing I will just leave you with is I brought this up several times, special education and making sure that we transition to going to the Maryland online format. For everyone on the call, Baltimore County is one of the only jurisdictions that is not part of this statewide system. And I think that would help all teachers in dealing with Baltimore County IEPs, but also when IEPs coming into Baltimore County, it would just help to have that standardization. So I'll just close with that. Thank you very much for your service.
I appreciate that. Definitely appreciate the partnership throughout the years on these very important projects. And I'll share again for the viewing public. It's definitely something that we have brought up and brought forward. I think we're one of 4 or 5, as you've indicated, counties that are not on the state system. The response that we continue to receive are the benefits of being on this additional system and access to information make a significant difference for our families. But I certainly can see both sides of it. It's certainly, there is a training crunch, and it will take it will be labor intensive to transition over, but there is an ease when you have students moving from school system to school system. And so I think a final decision will need to be made on that matter, one way or another, one that benefits the students in the maximum way possible, as special education continues to be a priority area in Baltimore County Public Schools. So thank you for that.
Yeah, I mean, as someone who uses that system every single day, it's a very user-friendly system, and you would save teachers a lot of time. Someone moves into Baltimore County teachers don't have to, redo everything. And then if they move out of Baltimore County, they're using the same IEP. So I think it's something we really need to move forward to. Again, thank you for your service.
Thank you.
Mr. Chair?
Yes.
I think I will be the last member to speak up. So maybe I can put a nice cap on a nice, very thorough and comprehensive presentation by Dr. Rogers and her staff, Dr. Grimm and Mr. Cantler. Dr. Rogers, I just appreciated you since you've taken over the position of superintendent. You've always been available to me and to the other members, and sometimes you were proactive in calling us when there were things that were going on within the school system or budgetary wise or labor negotiation wise or whatever, you were proactive in letting us know in what's happening, and were able to articulate to us where you may need our support. And I think that just shows your leadership quality, with your willingness to do that. And I don't have any metrics at my disposal to back up this statement, but it just seems to me that over the last few years with you in the role of superintendent, that the amount of issues, Councilman Marks mentioned one with the transportation issues that we were having when you took over, but there were others. There were student behavior issues. There still are, of course, but and there were just numerous things where parents would come to our offices with a complaint, with an issue, and it seems like the frequency of those complaints or needing the school system to address these issues, I think, has gone down significantly in the past few years. And I think that's also, we can attribute that to you and your team's leadership. And then when there was a problem, and I have to give him a shout out, because I give him a shout out every year because he's outstanding at what he does. That's our favorite legislative liaison, which is Tony Bazemore. When there is an issue, we email Tony, we call Tony, and when Tony says he's on it, and it gets rectified. So he's just been an outstanding asset to me, to my staff, and I'm sure to all the other council members. So thank you for your service, and good luck to you and whatever your next endeavor may be.
Thank you very much. I echo your sentiments. Mr. Bazemore is absolutely awesome. And next endeavor's 2-year-old granddaughter. So thank you to everyone.
Okay. Thank you, Mr. Chair.
Okay, thank you, Councilman Crandall. Who, someone else spoke up?
Councilman Patoka.
Oh, Councilman Patoka, go ahead.
Yes, thank you, Mr. Chair. I was negligent in my earlier comments about not thanking Dr. Rogers for her service. I know that you have lived and breathed this 24/7. So it's not like you came to work and just started thinking about things. It probably consumed you much of your time. So I think you've done great work, and you've dedicated your life to the students and families of Baltimore County. So thank you so much. And thank you for keeping Mr. Bazemore close to you, because he is a very talented person, very skilled person. Worked with him for many years, and I just wish you well.
Thank you. Thank you very much.
All right, Dr. Rogers, I won't be negligent either in thanking you for, everything you've done. We truly are going to miss you. And, you were really a breath of fresh air from the beginning. Just coming in, I know the council had a lot of issues where we just were not being communicated to well. And you've been above and beyond with, keeping us informed and always being there when we, if we were to call. And the same, I hope we were the same as well, that, we were always here for you. Like I said, it's really fun to go out and be able to brag about the school system a little bit. And we've had some improvements everywhere. So that's nice to be able to go to the public and say, hey, this is a bright spot. We're seeing improvements. Things are changing, and that's a good thing, because that means improvements in the school system mean that our youth hopefully are going to have brighter futures as well. It means a lot, and I know we all don't necessarily think about that all the time, but we know that students who are able to progress and thrive in our school system means that they can go out in their life and hopefully lead really productive and thrive in life and be able to live a dignified life. And that's what it's all about. And also, you know, add to our future and take care of us as they go out into the world. So thank you so much.
Well, thank you. Thank you to all of you for your kindness, your partnership. I do not take it for granted. I believe BCPS is poised to continue to do well with your continued partnership with whoever transitions into the role. So thank you to everyone.
All right, thank you. And I think that's all. Is that correct, Ms. Irwin?
That's it. That's
Okay.
wraps the hearings.
All right. Well, good afternoon, everyone, and we will see you soon.